Hey everyone, Pinterest stock is down 54% off the high, and I'm going to argue at current valuations, Pinterest makes an excellent investment. So I'm going to share with you several of Pinterest's critical financial metrics and monthly active user metrics to make my case for why I think Pinterest makes an excellent stock to buy at these prices. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I highlighted, Pinterest stock is down 53.5% off the high. That's recovered from even lower levels the company reached in late or mid 2022. Remember, Pinterest suffered as Apple made changes to its privacy policy, making it harder for Pinterest to collect user data and then sell targeted advertising. Pinterest has since found a way to re-accelerate growth and is now benefiting from those investments in its product. In the latest quarter, Pinterest revenue grew by 23% to 740 million, and global monthly active users increased by 12% to 518 million. Management saying that thanks to our investments in artificial intelligence and shoppability, we're driving an even greater return for advertisers and gaining access to performance budgets. And that's true. Initially, following those changes by Apple, Pinterest's business suffered, and they spent time trying to figure workarounds to those changes by Apple. They've announced some product changes, making it easier for Pinterest to collect information from users directly. One such change they did was they made users provide an email address and their age, and that allowed more information to be collected directly from users. So Pinterest didn't have to secretly collect the data, or I shouldn't say secretly, but covertly collect the data. Now they can just directly ask the users for the data, and then using their algorithms, using artificial intelligence, find other ways to get insights about their users that they could then share with advertisers and therefore drive a better match between advertisers and their consumers. So not only did Pinterest increase its monthly active users in the latest quarter, but they've been accelerating monthly active user growth, and that's been a great sign. You recall how I talk about these trends in critical metrics as being reasons to not buy a stock when it's too expensive? And here's one case where the stock price is not expensive, and this critical metric is not only improving, but it's improving at an accelerating rate. So you'll see here the monthly active users, and what you have on top is the growth rate of monthly active users. In the first quarter of 23, they increased this metric by 7%, and then 8, and then 8 again, and then 11%, and now in the most recent quarter, 12%. So the rate of growth is increasing at an increasing rate. The second derivative is improving, and that suggests a premium valuation is deserved for a company that delivers this kind of performance in a vital metric. And monthly active users is an absolute vital metric for social media companies like Pinterest, because the more users on the platform, the more advertising can be shown, and the more advertising means more dollars. Further, more monthly active users on the platform attracts more monthly active creators, which then makes the users more interested in engaging with the platform and feeds into that positive virtuous cycle. So this is an absolute critical metric, and it's improving at an improving rate. I love to see that for an investment, and especially for an investment that's trading at a relatively discount valuation like Pinterest is. Now, another important improvement Pinterest has made is that it's attracting monthly active users from the US and Canada. Why is that important? Well, look at the average revenue per user from the US and Canada. $6.05 in the most recent quarter. That was up by 19% year over year. So it's growing the fastest among its four distinct regions, and it's the most highest in those four distinct regions by a large margin. It's more than 4 times the average for the whole company, and it's almost 60 times as much as it generates in the rest of the world, where it was just 11 cents, and more than 6 times as much as it operates or it generates from Europe at 86 cents. The reason for this is consumers from the US and Canada have more purchasing power, and so advertisers are more interested in gaining access to those purchasers, right? Because those viewers have the potential to spend more money. And so if I'm a business, I want to access those users that can spend more money, right? That makes sense. And so they're willing to pay Pinterest for the privilege to advertise to those users. Now, longer term, Pinterest has done a good job improving its operating profit margin up to 1.99%. The margin itself, not very high, but it has improved tremendously from negative 125% in 2020. Now, Meta Platforms regularly achieves operating profit margins close to 40%. I'm not saying Pinterest will ever get there, but the social media business model is lucrative and it leads to high or relatively high profit margins. So even if Pinterest gets only to half of where Meta Platforms is at 20%, it would be a very strong profit generating machine. Already, its cash flow from operations to sales have been strong, 24.61% in the most recent trailing 12-month period, up from negative 6% in 2019. The big difference here, of course, is stock-based compensation. When companies like Pinterest pay compensation in stock-based compensation, that is the non-cash expense, and so it makes profitability lower, but it improves cash flow from operations, as you see here from Pinterest. Further, over the next 5 years, the analysts that are following Pinterest stock, they expect the company to deliver 23% earnings per share growth over the next 5 years. That's more than double the rate of the average stock in the S&P 500 expected earnings per share growth for those next 5 years. And Pinterest stock is trading at a forward price to earnings of just 23. So it's trading at the same valuation as its earnings per share expectations, 23 and 23. Recall, a general theme, a general idea I like to suggest to consider is when you see an earnings per share growth rate that's at or below the forward price to earnings ratio, it suggests that you're probably getting a good value for the stock. Now, you need to pay attention to more than just that one metric, but that one metric, in addition to everything else, can lead to a conclusion suggesting a stock is a good value for long-term investors. And it is, it is indeed the case here with Pinterest. After all of this analysis I've conducted, I think the valuation is very, very strong for long-term investors. So I'm recommending here, again, Pinterest stock as an excellent stock to buy at current valuations. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.